To identify a uptrend, you need to see more higher highs and more higher lows. If you see higher highs or you see higher lows, or you can see both of them, it means price is an uptrend. Let me give you an example. A lot of people might not understand it, but just by looking at it, you can see that price started moving from this point here. Now, where is price? Price is at this point. Price is above now. So automatically, even with just that, you know that price was on an uptrend. But that is not enough. The easiest way to identify if this is an uptrend or a downtrend is by identifying your higher highs and your higher lows. So now if you look at this point, this is the first high, this is the first low. This point here is the first high, this point here is the first low. The next high that was formed after this, your first high, we mark our horizontal line from this point. Do you get? The next high that was formed, it was formed above the level of the previous high. So that makes this point a higher high. This next high again, we draw another horizontal line. The next high that was formed after this point, it was formed above the level of the previous high. This is our previous high. So the next high that was formed above the level of the previous high. So that makes this another higher high. What do we do again? We mark our next high again with our horizontal line. The next high that was formed above the level of the previous high. So that makes this also an higher high. Go back to the lower part. This is our first low that was formed, the V shape. What do we do as usual? We draw our horizontal line. The next low that was formed above. You can see that it didn't get to this point. It stopped above. That makes this an higher low. It's higher than the previous low. Do you understand? So now, what you do next again, we mark this point again. The new low that was formed, you can see V shape again. The new low that was formed higher than the level of this previous low. So this is also an higher low. From our teaching, we know that uptrends are formed when we see higher highs and higher lows, right? Continuous formation of higher highs and higher lows. So you can see higher high, higher high, higher high, higher low, and higher low. So this automatically makes this particular chart an uptrend. Whenever you can spot your higher highs and your higher lows, just know that particular chart is an uptrend. For a downtrend, it's also simple. What we need to just identify lower highs and lower lows. If you can identify lower highs and lower lows on a chart, that makes that chart a downtrend. So the first thing to do is to spot out your highs and your lows. First of all, the first thing to do is spot out your highs and your lows. N shape, this is a high, right? V shape, this is a low. So this is our first high and this is our first low. We draw our line above here. The next high that was shown, you can see that it did not pass the level of this previous high. It did not go upward. It went below, it went downward. Even if it was here, it came to, as far as it did not pass this point, all right, that makes it a what? A lower high. So what do we do again? We draw our horizontal line again. The next high that was formed also formed lower than the level of the previous high. So this makes this a lower high. The next high also, you can see the N shape. So the next high that was formed lower again than the level of the previous high. If you draw this our line, you can see that the high did not get up to this point. It was formed lower. So this also makes it a lower high. So for the lows now, this is our first low. So the next low, V shape, you can see the V shape. If you draw our horizontal line at this point, you can see that price went below it to form the low. So that makes this a lower low because it is lower than the level of the previous low. You understand? Next thing, we draw our horizontal line for the next one. So price again formed another low down here. This is also a lower low because it was formed lower than the level of the previous low. So you can even use this as a strategy. The safest way to trade this when you see an uptrend is to look for buy opportunities. It means price is increasing value. Do you understand? So the safest way is to look for buy opportunities because price will keep on going upward. So for the downtrend, the safest thing to do is to sell because what price is dipping, price is going downward. But it means price is losing value. That is just how to identify uptrend and how to identify downtrend. Now the third one is consolidation. The third trend is consolidation or sideways bias. This is the easiest to explain. This is easiest to understand, but it's harder to even find on the chart. Most people will see consolidation, but their mind will not pay attention. Let me explain how to see a consolidation. So it's consolidation like the word sideways. It's going sideways, sideways. It doesn't go higher and it doesn't go lower. What does that mean? For example, I have an area like this. Price forms an eye, gets to this point, comes back, N shape. This is what? This is an eye. Price gets back to it down, forms a low, V shape. This is a low, right? Gets back to that point again, comes back again, forms another eye, comes back to this point again, forms a low. It keeps on doing like that and like that. You notice that price did not break out above the level of the previous high, and price did not even form below the level of the previous high. Do you understand? It formed at exactly the same level. It formed at the same level. The lows also. The next low did not go deeper, and it was not formed higher also. It also was formed on the same level. High was formed on the same level. Lows was formed on the same level. This particular moving upward and downward, makes this particular point a consolidation. The best thing to do here is it buy or sell. The best thing to do here is to STM, stay out of the market. That is the best thing to do. Stay out of the market. When you see consolidation, don't buy, don't sell. Stay out of the market. The only time you can buy or you can sell is when price has successfully broken below this point, below your low, or if price has successfully broken above your high. Just like it has to break out of this area before you can either buy or you can sell.